Thank you. It is time to take a look at your money here on Good Morning Quad Cities, and we want to start with your weekly stock market recap. The S&P 500 is up 1.8%, the NASDAQ is up 2%, and the Dow Jones Industrial Average also up 2%. And I do have to give a shout out to Andrew here because we had some technical issues this morning, so he's helping us with our graphics for this segment, so bear with us a little bit.
Andrew, our fate is in your hands this morning.
That's correct. So in 2022, it wasn't a kind year for the U.S. stock market, but this year we are seeing some much needed relief for investors. And then joining me is Mark Ravicheski from the Quad Cities Investment Group. So thank you so much for joining us this morning.
Great to be here as always. Happy Monday to you.
Yeah, happy Monday. So we want to talk about more about this. So what are your thoughts on this ongoing increase that we're seeing on the stock market?
Yeah, this rise in the stock market we've seen this year does require, a little bit of perspective. Without question, so far this year, the stock market has done very well. But remember, David, the ultimate goal for investors and all of our home investors especially is for the market to return to and then eventually breach and exceed those all-time record highs we had back in the stock market in January of 2022. Now, so far this year, look at this graph here. The S&P 500, David, up at a very impressive 11.5%. But the S&P 500 is still short 10.7% from that all-time record high it set back again in January of 2022. NASDAQ up a massive 26.5% so far this year. But again, NASDAQ is still down 17.5% from its January 2022.
That means it took a huge hit if it's, if it's up 26 and it's still down 17. That's a pretty big hit.
It was down a lot back in October of last year. Finally, Dow up, up a modest 1.9%, but again, David, still has 8.3% short from its January 2022 all-time high.
Well, I think people at home and people who maybe this isn't their world, we see the gains, great news. We see that it's still down, so do we invest or not?
You really need to ask yourself, David, what is your timeline for when you may need that money that you're potentially looking to invest into the stock market? Is it shorter term? Is it longer term? Because in the shorter term, I do think there's going to be a lot of up and down volatility in the stock market. Look, we still have high inflation. We still have rising interest rates. There's still a very uncertain, cloudy outlook on the U.S. economy. And until Wall Street gets some level of comfort on these three issues, David, I think Wall Street is going to be very hesitant to push the stock market back to those January 2022 all-time highs. Now, from a longer-term perspective, there is an opportunity to buy into the stock market at these much, much cheaper prices. But if you do what's called dollar cost averaging, where you gradually invest a little bit of money into the stock market over time rather than all at once. A great example of dollar cost averaging that most people already do is their automatic contributions to their 401k retirement plans. Every paycheck, you're gradually investing a little bit of that money into the stock market.
Okay. You talked a little bit about the economy, and there was that recent employment report that just came out. There was some mixed reviews, showed good numbers of jobs being added. What are your thoughts on it?
If you take a look at the U.S. economy, there's a number of areas within it that we're starting to see some of those red flags, but the labor market is one of those aspects that still remains quite strong. Regarding this latest batch of data that came out on Friday, in my opinion, a little bit mixed. On the positive side, look at this. In May, 339,000 new jobs were added, well above the 190,000 that Wall Street was expecting. So far this year, David, the U.S. economy is powering out 315,000 new jobs a month on average. There's currently 10.1 million unfilled job openings. This conveys that employers are still actively and aggressively looking for workers. Now, a little bit on the negative side, in May, David, the national unemployment rate did rise from 3.4% in April up to 3.7%. Wall Street was expecting that rise in the unemployment rate from 3.4% just up to 3.5%.
Okay.
But finally there, David, look at this annual wage growth. It reported at 4.3% in May. Remember, Annual inflation rate, 4.9%, which means that
We're actually making less.
exactly, wages are still not keeping up
Not
with the
keeping up.
rise in consumer prices.
Yikes. All right. Well, thank you, Mark, for all of your expertise today, and we'll check in with you again next Monday.
Great to see you again.
You
Enjoy
too.
your week.
Thank you.